Hello, my name is Riaz Sidi, Director of Marketing at AutoServe One, and welcome for another installment of the Shop Floor Battleground Coaching Series, episode number 14. Happy New Year to you and your staff and your friends and family. We're very excited for 2019, where we're going to be sharing lots more information with you. But before we get started, we're just going to wait for everyone to arrive. And if you want, at the bottom of your screen, you should see a little chat box. If you want to click on that, please. And just let us know where you're watching the webinar today from, because we know we have attendees from all over North America. So hello, we have Joe. Welcome back, Joe. Happy New Year to you from Nassau. We have Dolan from Ottawa. We have Justin from Barrie. Hey, Justin, welcome to the webinar. We also have Mitchell from New Jersey. We got Matthew from Calgary, Alberta, Eric Lafon from New Liskeard. We have Dustin from Winnipeg. Welcome to the webinar. Very excited to have everyone here today. And we have two very special panelists for us today. Returning to the Shop Floor Battleground series is Murray Voth. Murray Voth is president at RPM Training and has worked with hundreds of shops and shop owners, helping them to be more profitable and reduce their stress levels. He is known as an implementation coach. For the last 10 years, he has been the senior trainer, coach, and facilitator for a major automotive training company in Canada and in the US. Murray, great to have you back.
Good morning, or good afternoon, or good evening, depending on where you are.
Excellent. And we also have Jamie Cuthbert, founder and president at AutoServe One. Jamie is an enthusiastic leader in creating transparency within the automotive aftermarket between shops and consumers. His career spans 25 years of helping auto parts companies and auto repair centers across North America to improve sales and strengthen customer retention through a core theme of customer education. Jamie, pleasure to have you back.
Happy to be here. Thanks everybody for attending.
Excellent. So throughout the webinar, we're sure you're going to have lots of questions, and there's going to be some polls as well. So if you have any questions, feel free to click on the Q&A button at the bottom of your screen, and we'll take questions at the end. We'll ask Murray and Jamie to share their insights. Also, we'll be conducting a short survey, a feedback survey at the end of the webinar to get your insights into how we did today. So we do appreciate you hanging around for that as well. So this month, we're going to be talking about taking the tactical approach in strategic planning. So grab your pens and papers or your notepad or whatever device you're going to be capturing all this great information on. And again, questions and comments, we would love to hear them. So please use the Q&A button at the bottom of your screen, and we will ask them when appropriate. So Murray, Jamie, please take it away and share with us the tactical approach.
All right, well, thank you very much, Riaz. And again, hello, everybody. It's great to have everybody on board with this webinar. And following the theme of the Shop Floor Battleground, kind of a little bit of a military metaphor here, taking the tactical approach in strategic planning. It's one thing to make a general battle plan. It's another thing to bring that down to the strategic level, and then another thing right down to the tactical level. A lot of businesses make a forecast or a budget every year. And what ends up happening is rather than break that budget down into actionable steps, they usually put it on a shelf only to look at it at the end of the year to see if they have reached it or not. And that's not just small businesses. That's some very large businesses and corporations. Actually, that's as much of budgeting as they do. They might spend weeks creating it, and then the team leaves to go to work without actually knowing how to do that. And then what happens is they begin this cycle over and over again. And so in this episode of the Shop Floor Battleground, we're going to come to a clear understanding that goals, but it is only in planning actions that we accomplish these goals. So welcome, and get ready to learn how to forecast not just your sales, but also your net profit, and not just plan it, but also achieve it. I've got a question for the group here, Riaz.
Excellent. So if you want to take your mouse cursor, we're just going to launch our very first poll. And if you want to click the polls button at the bottom of your screen, I'll be going ahead and launching it. So it should actually pop up as well. So let's go ahead. Do you create a budget or a forecast for your shop? Every year, yes, sometimes, or nope, never have. So go ahead with your cursor, please select the answer that best reflects your business, and then we'll hear Murray's insights on our answers here. So we'll just close up the poll, and we'll give you 5 more seconds or so to get your answer in. And all right, so let me share those results with everyone. Murray, so it looks like we have 67% do it every year, 13% of our group today sometimes, and 20% never have. What are your
Oh,
thoughts?
excellent.
Mm-hmm.
Well, I'm really glad to hear that many are doing it. Definitely in my experience as a coach, that's definitely an improvement over what I've known years ago. So I want to compliment everybody listening in on the fact that they do that, and want to take it up another notch for the people that do it occasionally or never have, and for those that consistently do it, is to maybe give them some new tools on how to do that. And the way we're going to do that is learn how to forecast from the bottom up rather than from the top down. The idea being that we can set a goal to go from 750,000. But the idea is what are the steps that we take to actually accomplish that? I do want to discuss the fact that we do have to make a profit as a business. You'd think people that go into business would know that or would assume that, and chances are their first intentions were to make a profit when they went into business. Based on numbers from J.D. Power and Associates and from a firm called E.K. Williams, the average independent automotive service provider in Canada and North America is actually running between 5 and 7% a year. That's quite low considering that the benchmark or the guide for that is 20%. Another interesting number is that it takes about 7% retained earnings, which is always a portion of your net profit, to keep your business current. Keeping your business current means not just scan tools, software, things like that, but the sidewalks are up to date. The roof is not leaking, it's been fixed. The driveway has been paved. You have hoists that are up to date, alignment equipment that's up to date. And so basically what's ending up happening here is in North America is that a lot of automotive shops are basically in a break-even mode. So what I sometimes say is that, ladies and gentlemen, you've bought yourselves a job. Now, I want to be careful saying that because we do want to make a profit, we do want to earn more money, and I don't want to criticize people for that, but I just want to make sure that we understand that we separate our job as an owner, a manager, a technician from being an owner of the business and holding it accountable to giving us a return on investment for the money that we've put into the business. The other thing that happens to small business is that we don't stress out that much about it as maybe we should, because there's a lot of other perks that we get out of business and some perks of life that we expense to the business. So for example, we may have our vehicle expenses paid by the company, maybe our gas money for our personal vehicles or our family is paid through the business. Maybe there's a snowmobile or a motorhome owned by the company. Maybe we go on some dinners or go out on a trip on the company dime. And you know, I just want to be careful when I say this. I have in my notes, I have this in parentheses. People that know me, I always say when I bring this topic up, this is an observation. I always say that what you do with your expenses is between you, your accountant, God, and the CRA or the IRS. Obviously, Americans know who the IRS is, and Canadians know who the CRA is. And basically, for both countries, those are the tax people. And I don't personally have an issue with that. Again, I leave it up to you to choose that. But one of the concerns that I have that I do see people doing is sometimes taking too much money out of the company, and then there's not enough left over in the company to grow it and to keep it current. So that's always a caution to do that. So the seems like I am going backwards and forwards here. Here we go. We're going to talk about an example of a shop of $650,000 in annual sales. That's not a very big shop, but there's lots of them out there like that. And if they're at between 5 and 7% net profit, they would be netting between $32,500 and $45,500 in net profit. Now, some people say, well, that's not bad when I add it together for the amount of money that I earn for my family. I take home a wage, I take home a salary, I take home a bit of profits and some other things in the business, and I do okay. But the idea here is you could be doing better, right? You could be taking a good salary and having that profit left over and having something left in the company with which to sell the business. Another quick conversation that I want to have is about something called return on investment. Return on investment is if we take an example of financial planning, we take the average person who's a wage earner, is not a business owner, is going to be taking money to RSPs, 401ks, I think you would call them in the States, and they would be expecting a return on their investment for their money. Whether it be 2% or 5% or 7% or whatever amount that's there. And interestingly enough, in our industry, people rarely add up the assets, the tools, the equipment, the inventory, the land, and the buildings to see how much money they've actually invested into this company that they have. And again, talking about accountants, and I've made these comments before on these webinars, that accountants are very valuable for counting the money and making sure that they reduce the taxes that we pay. But an associate of mine reminded me of a term. He says there's cost accounting and there's management accounting. Well, cost accounting is making sure that the beans are all in the bank and that we reduce our costs. Management accounting is about making it grow and making it better. And not all accountants are management accountants. So the idea here would be is if you add everything up, what would it come to? Would it be $500,000? Would it be $750,000? Would it be $1 million? And I challenge my clients to think, if you actually had $500,000 that you were putting with a financial planner, if you were putting into investments, you would probably be expecting a pretty solid return in today's market. I've been told by some people it could be as high as 10%, depending on your portfolio, that you could get back. And so the idea here is, why are you working as hard as you are in your shop and in your business when you're not putting that much money aside for that? I think it's time here for another question, Riaz.
Absolutely, perfect. So once again, I'm going to launch the poll here and you'll be able to vote. So please grab your mouse cursor and here's the question. Do you know or can you find out what your return on investment was last year? So do you have access and the ability to find out what your return on your investment was last year with your shop? So go ahead, please, and select the answer that best reflects the reality for you with this question. And we'll leave the poll running for 10 more seconds, and then we can reflect on the answers together. So it looks like off the bat initially here, with a few more votes coming in. There we go. And I'll just share the results. 67% say yes, and 33% say no.
Oh, that's fantastic, Riaz. I'm actually really pleased with what I'm seeing today and in some of our other surveys recently. There's been some advancement in this industry in terms of people tracking their numbers better and having information. Now, the question I should have followed up with, which I didn't, is did you achieve the return of investment that you wanted? So that poll isn't built in there, folks, so we'll have to leave that one for at a future webinar. So thanks, Riaz. Appreciate that.
No problem.
So the industry benchmark for net profit as a percentage of sales is 20%. So that same shop with $650,000 in annual sales should technically have a net profit of $130,000. So let's talk about how we're going to get closer to achieving that. All right. So back to the title of the article, Budgeting for Net Profit. Most of the budgeting practices that I have been part of in the past, when I was working, when I had my own service stations, working with the oil company. A while ago, I was affiliated with a very large parts company, and I was aware of their budgeting practices. And it seems like questions are asked, how much are we going to increase our sales? How much can we decrease our expenses? Now, these are things to look at. They are important. I mean, decreasing your expenses is definitely a worthwhile exercise. But the thing that I find is many times this is just a dart throw because there's not usually a lot of science or math around the decision. So the idea would be is how much can we increase sales? Well, we're going to increase our sales by 10%. Well, what gives you the information that says you can actually increase your sales by 10%, right? Are you going to get more customers? Are you going to charge more per invoice? Are you going to raise your labor rate? Are you going to charge more for parts? These are dozens of questions that would come to that. And in some cases, I call it a dart throw, the way it's been done in a lot of places. So I've actually been laughed at by a couple of accountants in a room when they saw me training this in a live session one time. And by the time we were finished, they weren't laughing anymore and were coming and talking to me about how I've been doing this process of teaching people to learn how to budget from the bottom up. All right, so I'm going to start with a shop before and after scenario to show you the existing shop numbers and then to show you the bottom-up forecasting method that we would use to get you there. So I'm working with a real shop, 650,000 sales. Their net profit was 5.6%, and that was 36,400 that they dealt with at the end of the year. In many of these smaller shops, the owner is spending about 25% of their time in the bays to generate that amount of money. And they usually draw out a below average salary for the amount of time that they spend in the business. And I've seen these numbers, by dozens, if not hundreds of shops. When I first work with them, I see these numbers. Now, it's very possible that these owners are taking home close to 100,000, like I said earlier, when you combine an undervalued salary plus that net profit plus some of the perks and benefits of being in business. But what ends up happening is there's no money left to keep the business current, such as the testing equipment or the hoists. That picture I've selected there was just something that I downloaded from the internet, folks. I have real pictures I've taken, and I don't to show real names of places that I've been to talk to. But there are shops in North America that have got this run down. Their doors are closing, and the owners have nothing left to sell. They're retiring. People are buying the land and the building for for cents on the dollar in a lot of cases because of the contamination on the land from the previous service stations and things like that. And the thing that gets me going in the morning on the days where I don't want to get going, on the days where I might feel tired or the days where I might feel discouraged, is these stories that I've met in the past. Is if I can help one shop owner that I meet this year to get out of this scenario where they're not left behind like this, I can get up in the morning and get to work and keep doing what I'm doing. So I'm very passionate about that. And I have to say, working with dozens, if not hundreds of people who have the net profit that they need, the bills look great, they've got investments, debts are paid off and different things like that. So very happy, very pleased with the fantastic people that I work with. And what I was also going to say earlier was that I can say for sure that our people in our industry are very hardworking, offer a lot of value to their customer. They're also really intelligent and diligent. So why aren't things better than they are? I believe it's because of a lack of knowledge that helps us to see things differently, and business practices that reflect that lack of knowledge. And I've just been so privileged and grateful in my life to have so many people that have taught me things about life and about business that have helped me build mine and help others build their business. So let's get down to where the rubber meets the road, all right? So that's $650,000 in sales. Generally, when people haven't taken much business training or coaching, they end up at a 40 to 60% ratio of labor to parts, all right? So in this case of this shop, 260,000 in labor and around 390,000 in parts. They generally tend to be at about a 54% gross profit, if not lower, on that labor, and about a 40% gross profit, if not lower, on those parts. And they end up with a total gross profit of 296,400. And of course, here we come in into the expenses, all right? And generally, on average, it takes about 40% of sales in North America in fixed operating expenses to run your business. And this shows you how this shop ends up with that 5.6% of net at 36,400. So I would say if I meet a shop that hasn't had coaching and training and they're at $1 million in sales, the percentages work out similar. If they're at $2 million in sales, percentages aren't much better. I actually have worked with one person a few years ago who was at 2.5 million and had to take money out of their RSP 401k account in December to make payroll because December was such a quiet month for them cash flow wise. So that's why I like budgeting for net profit rather than sales, because you can chase sales all day long without having any profit at the end of the day. So let's go from the bottom up. Net profit, all right? $150,000 is what I'm going to put in the bank at the end of the year. Now people are saying, Murray, what kind of, pardon me for this expression, but I thought it was quite cute. What kind of unicorn blood have you been drinking that makes you think that you can actually do that? Well, this is how it's going to work. We're going to go backwards to do the math, and then we're going to put the steps in place to show everybody listening in how they can do that. So the number we're looking for is 150. The benchmark is 20%. We divide 150 by 20%, and we get 750,000 sales. So we are budgeting for sales, but in a bit of a different way. Once people have implemented a few systems and some of the coaching things that we do, their labor to parts ratio starts getting closer to the guideline of 55 labor to 45 in parts. And that is one of the biggest shifts that helps you achieve the net profit, because your net profit on labor is always higher than your net profit on parts, or it should be. So your labor sales are going to be 412,500, and your part sales are going to be 337. Now the interesting thing is a lot of people, including some accountants, go, if you're going to go from 290 in labor sales to 412, you're probably going to have to hire a technician. And I'm going to show you that you actually don't necessarily need to do that. I'm going to take a little bit of a breath so you guys can catch up on the numbers here. Now we're going to focus on the labor portion of that. So the 412,000, rather than 54% gross profit on labor, we're going to go for a 70% gross profit. And that means that that's 288,750,000 in gross profit. And we're going to take our parts from 40 to 45, and our gross profit there is going to be 151. Now, those of you that are really quick with the math, and I know some of you are, you're noticing that our gross profit on parts is actually a little bit less in dollars than it was with the other shop. And that's because we focused more on labor than we did on parts. We didn't worry so much about selling big jobs with a lot of big parts. We did a lot more maintenance work that is more profitable on the labor side of things. So the total gross profit is 440. I'm going to still use the same guide of expenses of 40% of sales, which is 290,000, and there's my net profit. Gross profit minus the operating is 150,000. Now these operating expenses are actually by $30,000. Again, cost accounting says reduce expenses. Management accounting says you might have some expenses that you might be valuable for the business. In some cases, this operating expense could be a proper salary for the owner as a manager. It could be a piece of equipment that they need so that they can offer services that they didn't offer before. It could be that they've got a great service advisor and they send that advisor for some extensive training courses and then give them a raise. So now you have some money in which to actually invest in your business and increase the ability to make the net profit. All right, so how do we achieve this? All right, so here's some other factors of the shop that I'm talking about. $95 an hour service rate. That's not very high. With most of my group members and clients, we're above $100 now in most parts of Canada. The States, I haven't worked with there a few months recently, but I'm starting to see it creep up over $100 in many markets in the States as well. But in this case, $95 an hour service rate. This shop is averaging about 2,750 invoices or work orders or ROs, repair orders, depending on where you're from, a year. So using these factors, we're going to do some calculations. Before, the early shop, the one that was at 650,000, if you divided their labor by their labor rate, they generated 2,737 hours of labor. All right. if you divide 2,737 hours of time, divided that by 2,750 invoices, you end up with about 0.999 sold hours per work order. So I just rounded it to 1 sold hour per invoice. The current shop at 412,500 divided by the same labor rate has now generated 4,342 hours. Divided by the same number of invoices is now 1.6 sold hours per work order. And I think some of you can see where I'm going with this, is in order for us to achieve that net profit, we can then focus on the sold hours per work order. Now, my very favorite topic the last few months. Take those hours from shop number 1, the before shop, 2,737 hours divided by 250 days of the year open. That's allowing for federal holidays and things like that. That equals 10.9 billed hours per day. Divided that by 3 technicians at these shops is 3.7 hours per technician per day of billed hours. And folks, that is not uncommon for me to see. Now, shops that see that before they've had any training are like, but I'm busy all day. I work all day. The tech's working all day. I don't understand where the time is all gone. And those are some of the topics I'm going to end my presentation with, just to make sure that we're clear on some of the changes that are made. The after shop, 4342 divided by 250, 17.4 billed hours per day, the same number of days. Now it's 2.5 technicians. It's very possible that we didn't lose a half a technician, but that owner who was maybe teching full-time or 3/4 time, maybe that owner is teching less in the business, but we don't need as much technicians, or maybe we've hired an apprentice after a technician left, and we're showing 7 hours per technician per day based on some of the changes that you're going to see coming here forward. So I've taken the $150,000 net profit, broken it down into the sales we need per technician per day, and this is what we're going to focus on. All right. So in order to meet our net profit forecast, we need to find 0.6 sold hours per work order. And the question is how do we do that? And one of my favorite cartoons, which I'm hoping you can all see, I'll leave that with you. And Riaz, time for another question.
Awesome. Thanks so much, Murray. A lot of numbers there. So we're going to ask, how are you feeling about all of this information? Just so that we're all on the same page here. So if you want to grab your mouse once again, and please answer the question. How are you feeling about all this information? Comfortable, a little overwhelmed, very overwhelmed, or don't know? And feel free to be honest here. We want to make sure that we're providing the best information and that you feel comfortable with Murray's explanation here. Just so we're giving you the right knowledge. And so we'll just give you a few more minutes, or sorry, a few more seconds rather, to answer the question before we close up the poll and share it over with you. All right. And Murray, great news. 74% of our audience today feels very comfortable with this information. 21% a little overwhelmed, and 5% don't know.
Awesome. Good stuff. Maybe we need to find a few more uncomfortable people to listen in, Riaz?
Well,
because my goal is to inspire people to be comfortable with all of this. So thank you, appreciate that.
Great.
So if everybody listening can imagine, only 0.6 sold hours per work order would give you 150,000 net profit. Where does that come from? Right? So questions that I ask people is, are you charging for brake inspections and diagnosis, for cooling leak diagnosis? Do you charge anything for all the rest of your diagnosis? What other opportunities like fluid services, flushes, and exchanges? A really great idea one shop created, and I actually found out that manufacturers have this in their recommendations for the vehicles, is a spare tire and storage mechanism service. So you take the spare tire out, you inspect it, you check the inflation, you service the cable and the crank, all for 0.5 of an hour of labor, right? When was the last time you saw someone stranded at the side of the road because they could not get their spare down and wondered if it was one of your customers? When we perform and charge for many of these valuable services, additional parts and fluids will also be sold, and that actually adds profit to the bottom line. But you may say, Murray, we're busy all day already. How do I fit in all of this extra work? Well, like I showed you before, the average independent shop is only about 54% productive, and that means that management is only keeping technicians working on vehicles about 54% of the time, or are only billing for 50% of the work, 54% of the work if technicians are actually working on cars 100% of the time. It is usually a combination of these factors that keep you from the net profit that you deserve. And I hope everybody understands that I am not picking on the technicians. Most technicians that I meet, 95% or more, are about doing stuff faster and better. But as an industry, we ask them to do a lot of things that are not really in their job description. For example, we have them answer phones. We have them order their own parts. We have them give rides to customers. We have them do long test drives, and not charge for it. We don't quote properly. We don't add time for rust, age, and condition of the vehicle. And sometimes when they beat the time, we discount it and give away their labor. So generally, it's management that is causing this issue rather than the technicians. So let's get into a few more specifics in conclusion here. If we take a look at the digital inspection world, on average, now this is probably even conservative, it adds 0.2 per work order or per hour. So if a vehicle was coming in for roughly an hour's worth of work, you would get 1.2. If something's coming in for 2, you would get 2.4. 3, you would get 3.6. So it's 0.2 per hour per work order that digital inspections are doing that. So they're a very valuable tool to implement to get that. Begin thinking about offering services not previously offered. One of the reasons why I measure the sublet sales of shops in the numbers that I measure is if I see a high sublet sale in a particular area, it might be time for that business to invest in that type of work. So for example, I know it's a very large investment to do, but an alignment machine and an alignment rack are some changes that some customers that I have made. I know some shops that don't do a lot of tire work. Getting a tire machine and a tire balancer can be some other things. Plus, the spare tire service, detailing, there's all kinds of opportunities out there for people. Charging properly for inspections is a huge one. We have this tendency to give away inspections in order to get work from our customers rather than building packages that show the value and that we charge properly for our inspections. And then another really big one is charging properly for testing and for diagnosing. One of the things that I find is technicians over the years, and I think this has probably been a 40 or a 50-year habit that we as shop owners have created in our technicians, is whenever they come to the front and say this vehicle has a leak or this vehicle has a noise, we say, what is it? And they go back and they diagnose it. So what's happened is we've taught our technicians to diagnose before they come to the front. So when they see a leak, they take the time to find out what it is versus coming back up, saying it has a leak, and us getting authorization and paid for having that leak diagnosed. And I know this next part could be a review for some of you, but it is really something that's working well for a lot of my clients, and that is the 400% rule. All vehicles receive some form of an inspection 100% of the time. It could be a 0.2 complimentary inspection. It could be a 0.5 inspection with an oil change. It could be a 3/4 of an hour inspection that has a charge to it. It could be a pre-purchase. Whatever the case may be, we do some form of inspection on every visit. And I know Jamie will talk a little bit about some of the due diligence of once you do digital inspections on what needs to happen so that those get done. All findings are estimated 100% of the time, and we document that. All estimates are presented 100% of the time. What I do find great service advisors know how to do is they know how to present the things that are needed right away in a dollar value, and then present the rest of it without a dollar value unless the customer has questions. So let's say, for example, you come up with $2,000 worth of work. Many consumers, when you present that to them, get a little bit of pushback, right? Oh, that's a lot of money. Great advisors will identify the maybe 2 priorities or 3 priorities for the $500 or the $600. They will present all the vehicle work that is required and talk about booking some of the other work down the road, showing that they don't need this work to stay in business and to make a profit. and that usually helps the customer be comfortable to have a discussion about their vehicle. And then, of course, anything that a customer doesn't get done that day is tracked in deferred work 100% of the time. And again, great advisors and owners are what they're doing is when they're booking people's appointments, they're looking at the deferred work, having a conversation with a client, and saying, "Hey, Pete, last time you were here, we identified that your brake fluid needed to be changed and we should bleed those brakes and flush that brake system out. Would you be prepared to do that today with these other services?" So the idea that we can bring up the deferred work at any time, not something that disappears in our systems. Imagine if your dentist or your medical doctor told you about the fact that you needed some work done. It wasn't urgent and could be done at your next visit 6 months from now, and then 6 months from now, they didn't bring it up again. You know, how happy would you be with that dentist or with that doctor? It's the same case in the case of these professionals. All right, so I think at this point, I had a couple more comments here. This is a picture of an application that I had created to work with my clients. And the top number is somebody new who's just joined us. Very excited to have him join me. And you see the 3.6 net profit, his mechanical gross profit, the sold hours per technician, sold hours per work order, average work order size, and service to parts ratio. And then down below, somebody who I've worked with for about 6 years now showed a 22% net, 56% gross profit, 8.1 sold hours per technician per day last month, 3 sold hours per work order, $695. And in this case, their service to parts ratio is actually the other way. They actually did a bit more in parts than they did in labor. But that's nothing wrong with that. At 22% net, I think this person could be extremely happy. So these are actual real numbers of befores and afters of people that I work with. And if you do want to contact me, I'm available at rpmtraining.net, and I have a brand new 3-day SMART course available. And you can check us out there. And at this point, let's talk to Jamie.
Well, thank you, Murray. I was listening so intently that
Got you off guard, huh?
I wasn't even ready for the handoff. That's
sorry.
All right. So sorry.
All yours.
All right. Hey, thank you. So everybody, I'm just going to just give me a sec. I'm just going to share my screen as well. And then we can talk a little bit about AutoServe One and what it really does, and how does it really combine with the rest of Murray's talk, which is really all about increasing average labor hours. So I think the big piece that I want to talk about is, well, how do we really deliver profit impact? Some of you that are already AutoServe One users, I'll try to be relatively brief. And some of you that haven't used it yet, then maybe you'll learn a little bit the next few minutes. But one thing I would encourage you, just hang on just through this part, because we are going to run a final survey at the very end, and we're really, really keen to get your honest feedback on about 4 or 5 questions. So, okay, let's get at it. So number one is, we want to attract the right team. This is, it wasn't right in the core of what Murray was talking about. We all know, though, that getting good technicians to stay with us in the business is key. And number 2 is, we've got to get all of the findings to advisors quickly and professionally so that everybody can earn more. The shop earns more. We didn't get into this, but some shops are more flat rate, meaning they pay by the job that is sold at the front counter, and some are more on salary. Now, you can imagine if you want to drive your technicians to find more work, now valid work, we're not finding things that aren't true, we're finding all work, then flat rate usually works best. You know, if they find more work, that means there's more work to do, and it also helps control your costs up front, because you don't have a flat salary you're doing all the time, you're doing flat rate based on the jobs that are successfully found, educated to the consumer, and then sold. So, all right, well, what does this mean? If we do this really well, the magic question is, what's it going to do? So what we did was this. We took a look at the revenue impact on 600,000 invoices. We made a big group, 200 shop sample. We thought that's pretty big. And we looked at, well, what happens, and these are pretty good shops. They're already doing around $400. What happens to them though? Well, when there's no inspection, they do about $400. That's our baseline. When they do an inspection, that is, you know, Murray's rule of 400%, you do an inspection every time. they got about a $90 lift, which is tremendous, right? That's about 20% or so. But what was even more impressive was when you actually sent the inspection. It's one thing to do the inspection, and so you can professionally, arm your service advisors and get your estimates done accurately. But number two is what happens when you not only do it, but send it out to the customer. And that's when you got your second bump. And that's you got a $146 impact average on the inspections. So that's the power of digital inspection. It helps you capture the information more thoroughly and consistently. And number two, if you send it to your consumer, they understand what you're saying more. And a 30% increase, if you took your average ticket up 30%, Murray was talking about, 10%, 15, maybe 20, but once you start pushing to 20 to 30, you really start making handsome profits. And what are we doing? All we're doing is more thorough auto service on each vehicle. Meaning you don't get busier, you just do fewer vehicles. And the quality of care goes up per consumer. And generally, consumers, and we've tracked this heavily, consumers that get excellent quality care, that is, you find more on their vehicle that could have broken down or you catch it before it breaks down, actually become the most loyal customers you'll ever have. They won't leave. The only reason people leave when an average invoice starts to approach $500, $600, $700 is if they're not getting an explanation of why that money is so high, why that charge is so high. But when you're giving them the information they crave, then you create what we call bulletproof customers, right? Because they really understand what's going on. Okay, so I promised I was going to be pretty quick, so let's zip over, and for some of the folks that had not seen AutoServe One before, you should see on screen now AutoServe One up, and I've just loaded a few inspections in. Now, these are all connected to a shop management system. AutoServe One integrates with shop management systems such as, Mitchell or Protractor or Vast, RO Writer, etc. So if you're running any of those, we have an integration that actually kicks these tickets automatically onto your dashboard. So right now I'm Frank Smith, the service advisor, and I think I assigned this to Tech John Anderson. So I'm just going to go over and switch users, and let's just pretend we're John Anderson for a second. So when John looks on his tablet, he's going to see all his vehicles, and in this case, I wanted to grab this Xterra. So I'm going to go ahead and grab it. I don't need to update that. There you go. And what this done is I've shown you an integration. Some of you might have Hunter alignment equipment. If you do, we actually integrate with Hunter Quick Check. So when the car drives up to get an alignment check, it actually brings a photo in automatically. If we hadn't used a Hunter integration, I simply would have touched on my screen and said add photo. At that point, I couldn't have gone over and actually shot a photo of the vehicle in front of me. Right? Reason for today's visit, looks like it said oil change and a front squeal, so that would have been pushed from your shop management, and then I can start inspecting the vehicle. Whether it's I'm checking, a 50-point check on this, or whether I'm doing a much larger, inspection check. Maybe I'm even doing a 100-point inspection. As per what Murray said, this is where you can make additional dollars. Let's say it's we're coming up on spring now. Let's say we're coming to February, March, even maybe it's the middle of winter for some locations. Run a like a winter complete diagnostic or a winter thorough checkup on the vehicle, and then you actually do not your standard 50-point inspection, but you load in a 100-point inspection. And AutoServe One users can have multiple inspections. You can have 10 or 20 in your shop if you want. It's kind of nice because you can even attract more fleet business with AutoServe One. I'll leave that for another day. So it's really simple. I've loaded it up. I can go over, I can go and snap a picture. If there's something that I want to grab, I can snap a picture. I can drag my finger on screen and highlight whatever it is I want. Probably don't need to make that overly obvious. I can take more pictures, and then I can zip down, and I'm simply checking off the vehicles I go. Now you can see here that all my dash warning lights, because it was a Hunter Quick Check and I had an OBD2 dongle, it actually gave me all of my sensor recordings instantly. Let's see my wipers, maybe I've got a broken or damaged blade. These are all drop downs. You can make them whatever you want them to be. And you can adjust anything, any order you wish. I want to go and take a picture, so I snap a picture. Maybe I want to highlight something. I could touch on screen and draw a circle or arrow, whatever it is that I really want, right? Whatever I want to highlight to my customer. And simply move along. Brakes, big part of the business, of course. I can put in whatever they're at. Maybe they're 2 or 3 millimeters. Rotors, the same. Once I've got that clicked off, then I can say, hey, how are my pads? I think they're at the service limit, or perhaps they're contaminated brake material. Anything at all you want, you can put in whatever order you want. I'm going to walk over as if I was in the shop, and I'm going to highlight what it is I see that's of concern to me, and I simply tap it and away I go. I can also make notes here, and I can just talk to text, and text will actually show up right on your tablet, or you can use your phone even. That's the other thing nice about AutoServe One is it's fully responsive, meaning this display you see here actually works on your iPhone, or it works on your Samsung or any other Android recent device. I can also shoot video, which is nice because maybe I've got a loose outer tie rod. Well, I'm going to want to actually shoot a video. I know it's a little jerky here for you, but I can shoot nice, smooth video, and that loads up into the cloud instantly. Tires, the same thing. In this case, under tires, I had the Hunter alignment information come in instantly. I can say, hey, it's out of manufacturer spec. I want to perform a comprehensive alignment inspection. Now, if you don't have integration with something, you can still go and shoot a photo of it. Perhaps if you do have an aligner or anything else to test, maybe you're even doing battery tests and things. I would say, well, I'm going to drop it in here, but battery test, you know, just highlight what it is that was the issue and stick it in there. And normally, of course, we wouldn't put batteries in with alignments, but I just wanted to show you that, right? And I just want to see, oh, I didn't have a VIN on that call. If I have a proper VIN, then actually the scheduled maintenance would look up because if that VIN actually didn't match up for me with a real VIN. If I do, then it'll actually show me all my scheduled maintenance at the end. So the last thing I do, I simply finish the inspection. You can see the little timer up in the corner. The timer actually showed that the timer actually showed how long it took me to complete that inspection, and that's kind of nice. You can check with your staff over time. You can track all their speed. Okay, I'm going to go ahead. I'm just going to switch users, and I think the next thing I'm going to do is I'll pop a report off. So just a second. I'll load up. And one of the key things that we have when we actually send reports out is we want to make sure that we've got I'm going to show two things. I'm going to show pardon me, it's taking longer than it should, so I'm just going to load up. One of the things that we should be showing is that the technician and the advisor have to make sure that the vehicles they're working on and the information we have, frankly, from the consumer is accurate at the beginning. So I'm just going to switch out for a second because it looks as if my internet just stalled for a second. So hopefully you can still hear me, but the web just paused on me. So I'll just go back here for a second. While that's loading, I'll simply finish up here. So the key part that we always want to be sure is when we send out reports, or pardon me, when we do reports, is let's make sure we're always sending them. Because the one thing is we never want to forfeit another $50 on a vehicle just because we did the inspection but we didn't send it out. What does that mean? It means we're going to need two things. We're going to need an email address at minimum, or even better is to have a cell number. Because if we text the report out to the customer, then we're going to get the biggest impact possible. So that's sort of our, I'd say sort of our base or sort of our threshold for what I'd want to see as far as the service goes. Okay, so I went ahead and I just swapped out. I'm just going to log in, and I was just sorry about that. I just looked and the system was slower, so I'm just going to sign back into my store instead of trying to reload that one. Why don't we do this? Just because I was concerned about timing, looks as if we've got a few more minutes, so I'm just going to go back into my store now, and I'll fire off that report at the end.
Mm-hmm. So Jamie, we can see your PowerPoint currently.
Right. Okay. So sorry about that. I'm going to bring this back up. So I thought what I'm going to do is I would just show the last piece, which is how we basically send out final reports. You should see AutoServe One on screen. Do you see AutoServe One on screen, Riyadh?
Yes, I do.
Okay, perfect. So the last thing we would do is we'd say, okay, I've got my report completed. Let's fire it out. So that's just the last step. It just shows this little summary of everything that was done. I can show, if I wish, that I've estimated all my items. This is kind of a nice checklist that makes sure you actually stay on top of pricing out your entire job. You can preview it if you wish. And at this point, I can go back and add elements. If there's any education I want to be putting in, I can add that as well. So in this case, I took a picture of the pad. I can also add break animations. And I simply click and say, yes, I want to educate why it's important, not only what we've done. I'll just quickly hit preview. It shows you the picture of the vehicle, shows the good news first, then the items that need the service. Picture of your advisor goes out, a picture of your tech goes out, who actually did the inspection, and then we simply send it. In this case, it looks as if we have an email address from the shop management system and we have a cell number. So if I click on that, it'll actually fire them off to both. And then I've actually sent it by text and by email. So the last thing at the end of the day, once the work is actually completed, is then you could actually notify the customer and say, thanks for bringing in your Nissan Xterra for service, a completed service. It's already done, but if I wanted to, I could go and change that. And then once I send that, it notifies, and I've actually got sort of a full light duty workflow in the shop. For AutoServe 1, some people are looking to say, hey, there's 3 tiles here. We also do have a 6-tile screen, which is more advanced workflow. But we'll hit that another day when we're talking about workflow and sort of managing things in the shop. So sorry about that little extra time required, but that is sort of the objective of AutoServe 1, is to catch all the things that are actually on the vehicle, communicate them professionally, and then share them. Because if we present them 100% of the time, you're probably going to do, maybe get 80% conversion or so, 70, 80% conversion. Sure, there'll be some items that defer to later. But once you've got a picture of something in your mind that needs repair or service, it's hard to get it out of your head. And if someone just tells you, it can be gone in seconds. So, all right, I'm going to stop sharing. I'll pass it back to Murray. He can then
James, Murray here. Could you just leave it on for a sec?
Sure.
Yeah, quick question. Can you click on, how long would it take you to click on the report, just really quickly, to show how many inspections have been sent versus not sent? Like,
yeah.
Management, is that part of this or not?
Sorry, I wasn't doing that today, Murray.
Okay, all right.
That is another good point, is we've got a couple other little clicks, but I can also look up on our analytics is how many were actually inspected that day, how many were actually scanned.
Okay.
And even we can drill down right into the technician level to know who's doing the inspections, who's not, who's sending them to the advisors, and who's not.
Good. Well, thank you.
Sure. You're welcome. All right, I'm going to stop sharing. I'll let it go back to you, Murray, so you can bring up your final slide. And then I think, Riaz, you wanted to chat with everybody about the survey.
And if there's any Q&A as well.
Sure. So I guess what we can do first is do a little bit of Q&A. If you have any questions about anything that Murray or Jamie talked about today, you can click the Q&A button at the bottom of the screen and just type in your answer, and then I'll go ahead and ask it to the group. We do have one question here, and Murray, I believe this is more of a messaging question around selling to recommended services. So I'll just read it here. What's the best way to get those who did get the testing and diagnoses done to actually get the recommended service done at your shop? Lots of people don't get the work done right away or downplay it, only to get the work done at another shop.
So that is a really good question, and like you said, it actually has to do somewhat with messaging. What I find is that a lot of times we think customers or the consumer is understanding what it is that we're asking them to do. And I'm going to give an example of a transmission service, of changing the transmission fluid. A lot of times we use the fact that it's something smells or it's dirty and things like that, and we think that that's enough information for our customers to use. And just one moment here, I'm trying to get the screen back up again. I think we'll just leave it where it is right now. So transmission service, somebody explained to me a few years ago that the main cause of transmission failure is overheating. And 90-some% of transmissions fails because they overheat. And then that, of course, causes other things to decline. And then, eventually the transmission fails. And they explained to me that the key element in cooling transmissions is the fluid. It transfers the heat away from the transmission to the cooler, et cetera. I'm not a technician trainer, but just very quickly, And so what ends up happening is fluid that's foamy and bubbly does not transfer heat very well. And so what ends up happening is if you don't change the transmission fluid, it doesn't transfer heat and the transmission breaks down prematurely. So the idea that we have to change the fluid is because the additives in it break down that cause that transfer to happen. So the idea here is we can't get too technical with our customers, but the idea of explaining to them about the heat transfer, the fluid getting foamy, not transferring, and that's why we have to change it. And then just asking them, do you want your transmission to overheat? And then leaving it with them, and that way they have to make a decision with that. We're not pressuring them, but at that point they're feeling the pressure themselves to, no, I don't want my transmission to overheat that way either, right? So that would be one example that I would have. So hopefully, so a lot of it is just really being able to understand technologically why it's valuable, being able to put that into everyday person's language, and then going from there and being able to do that. So. Any other questions, Riaz?
Yeah, absolutely. We do have another question here from Josh in Houston, and he was asking. You talked a little bit about the ratio between labor and parts, right? So
Right.
His question was, how can you move it? How can you move the needle in the right direction? What are some tactics you can implement
Sure. Yeah.
to move the needle in the right direction?
So one of the things that I have to make sure that I remind everybody is that we don't sell less parts. The parts are what they are, right? Whatever vehicles come in, whatever they honestly legitimately need, those are the parts that those vehicles will need. So it has to do with how much labor we're actually charging it. So three really common examples that I see in the industry are, I see a work order or an invoice that says remove and replace water pump, 2 hours, $200 plus the water pump plus the coolant. But I never see anywhere there that half an hour that it took to diagnose that it was the water pump. So we're missing on those 0.2s, 0.3s, 0.5s of when we diagnose mechanical and fluid systems. So that would be one piece. The other piece is that we trust the labor guides too much. The labor guides have been diminished about 35% since 2007. So we have to realize that we need to add time to our estimates for age of the vehicle, for those of you in the northern climates for rust condition, those of you in the hot climates for some of the concerns that happen with hot vehicles and things like that. So it's again, using a labor guide properly the way they were originally intended. The early labor guides in their opening chapters in the paper guides talk about adding time for severe service. The digital labor guides don't really talk about that, so that would be a reminder. And then a third area is that we as an industry tend to discount when our technicians beat the time. So the idea being that if we sell it for 3 hours, our technician does it in 2.5, it's still worth 3 hours. That was an experienced technician doing that job. And too many of us take it back down to that 2.5, and then that reduces that. So those are the quick things that help that scenario.
Awesome. Thank you so much. So we do have one more question, but before I ask that question, what I'm going to do is I'm going to actually launch the last poll that we have, which is a feedback survey. And if you're still around, thank you so much for staying with us. I'm going to launch that poll, and it's just asking a few questions about how we performed today, whether you would recommend us, what some of the things that we need to do going forward. And your feedback is obviously going to improve the webinars going forward. So thank you for that. So I'll launch that right there. If you want to take your mouse, go ahead and answer the poll questions. And in the meantime, Murray, I'm going to ask you one last question, if that's okay.
Sure.
So I have one more question here. It's from Matt in Toronto. And he asks about, so you talk about profit margin, right? Oh, sorry, net profit in terms of what the goals are. So sometimes in order to, reduce the tax burden on a company, people try and aim to have less of a net profit. Just some thoughts on whether we should be, being more mindful about net profit in terms of bringing that down, or whether we should be really reaching for the stars,
That's a fantastic question. That's a fantastic question. I have met people who have told me straight to my face, I'm not going to make these changes because I'll pay more taxes. And I said to them, so if you make $100,000 more and you pay 30% of it in taxes, you still have 70% more than what you, $70,000 more than what you had before. I said, besides, $30,000 helps pay for the paved roads that get your customers to your door. Taxes pay for, in Canada, the health plan that keep your technicians healthy. Like, I don't like paying too much tax, but there's got to be a little bit there. But here's the other thing. This is where great accountants help us balance the net profit, the retained earnings, which is leaving money in the company to buy equipment for the future, things like that, things like depreciation, and all kinds of legitimate ways to write off expenses. There's lots of legitimate ways to write off other business and family expenses that way. Another great tool that great accountants use is to make sure that if you do own the land in the building, that you have a holding company for the land in the building and a separate operating company, and that gives you another opportunity to manage your tax burden, especially during the time when you're older and you want to sell the business and create succession planning. So again, I wish there was a world with no taxes, and I wish they were lower, but having said that, I would still rather have $70,000 than not. I just think we just need to get over it.
Right. Exactly.
Death and taxes, I think, is what they say.
For sure. So we had a little issue with the poll, so it's now running. So if you want to grab your mouse and give us some feedback, we would greatly appreciate that. And I know it's a little bit after the hour, so we'll just keep it open for a couple more minutes. And Murray, are you good for one more question?
Sure. Yep.
Okay, just a quick one here. So I find it difficult to create sorry, this is from Tara. I find it difficult to create new and improved services since there are already so many. Any suggestions that create more revenue through AutoServe One? So I guess that's either for Murray and Jamie yourself as well.
Well, Murray here, I can take that on. At a certain point, you know, a vehicle is a vehicle, and we can only create so much. Otherwise, we're beginning to make things up. What comes to mind with this question is maybe not so much coming up with new services, but learning how to package them better. One of the things that I admire about some of the import dealerships, so for example, a Honda dealership or a Toyota dealership, Honda's got their customers very well trained to come in for an A service, a B service, a C, a D, and an E. You know, the A service, of course, is probably barely a $60 oil change, but a B service, you know, like a B level 5 service with a brake service and, you know, is usually around $300. A C service with a brake service and things like that is around $5. You know, the E is the timing belt and the water pump, and that's around $2,000. So the idea that this is what consumers actually appreciate. The packaging it together, and sometimes you can reduce the price a little bit of the package. I'm not really big on discounting, but if there's some overlap, you can get a little bit of a deal there. But people don't like being without their car. So if they can come in for 3 visits a year rather than 5, or 2 visits a year rather than 4, and get everything done and looked after, I find that combining services is a useful way. So one example for the northern climates is having your you know, your tire changeover, winter tire or summer tire changeover combined with a brake service, combined with an oil change, you know, combined with something else, cabin air filter. Next thing you know, you have a $500 invoice rather than having them come back in for 2 separate visits for the changeover, the oil change, and the brake service, right? And the overlap of having the wheels off already gives the technician a win on the time for the brake service. So I'm hoping that helps Tara with that part of it.
And Riaz, did you want to wrap up now for the rest of the folks?
For sure. Thank you so much, Murray. Appreciate your time. And Jamie, same to you. So thank you, everybody, for joining us today. We really appreciate you joining. We look forward to seeing you next month for the next installment of the Shop Floor Battleground. And if you have colleagues or friends in the industry that may have missed out on the webinar today, we're going to be sending out a link to the webinar and also the survey. So feel free to forward that over to your friends and colleagues. So thank you so much for joining us. Jamie, Murray, thank you for joining us as well.
Thank you.
And
My pleasure.
we will see you next time. Take care.